different forms of investment and how they are all rubbish compared to trading.
Well, I'm going to argue with you because some of these can, make some money.
People out there talking about all these different ways that we can make money, and if you are new to the world of investing, new to the world of wealth creation, you can kind of just be trapped in this minefield world of, or rather this overwhelming world of knowledge and information of you could do this, you could do that, you could do this, you could do that. And where do you really start? Where should you actually focus your energy and attention? And I'm just going to really sum up this episode quickly for everybody. The answer is trading. Hello everybody and welcome to the STARTrading podcast with me, Lewis.
And me, Sophie.
And today we're drunk. No, today we are talking about different forms of investment and how they are all rubbish compared to trading.
Well, I'm going to argue with you because some of these can, make some money.
Oh yeah.
Some of them are legitimate. And we're going to talk about different ways to get rich quick.
Mm-hmm.
Let's do it.
Because there are, let's be honest, people out there talking about all these different ways that we can make money. And if you are new to the world of investing, new to the world of wealth creation, you can kind of just be trapped in this minefield world of, or rather this overwhelming world of knowledge and information of you could do this, you could do that, you could do this, you could do that. And where do you really start? Where should you actually focus your energy and attention? And I'm just going to really sum up this episode quickly for everybody. The answer is trading. And I do genuinely believe that there is not a better way to create wealth and start creating wealth than trading. I believe in diversification, don't get me wrong. That's why I also invest in property. But I invest in property because I started as a trader and I built up capital. So I do think the best place to start your wealth creation journey is with trading. But yes, let's talk through some of the other options.
Let's talk through them, and let's talk through them on an average annual return.
Okay, I think that's good.
Feel free to tear them apart if you want to. But if we take trading as the control,
yeah,
what are we saying on an annual basis for a typical student?
Oh, brilliant question. So the reality is when we're learning how to master the skill set of trading, there are multiple strategies. If you want to increase the percentage return you're making monthly and therefore annually, you're going to want to increase the number of strategies that you are trading. So when we are starting off, we'll probably only master one strategy, but let's again just make the assumption that we have got multiple strategies under our belt, and we've got at least the 3 STARTrading strategies under our belt. So when we look historically about how they perform when you're sticking to that criteria, then we're looking at between 5% and 10% on a monthly basis. So annually, if we're at, let's go for the lower end of that. So not all the way to the bottom of 5%, not all the way to the top of 10%. Let's aim for just 6% on average per month. Then you're making 100% return on a yearly basis, which is double your capital. And let's not forget, in the UK, that's tax-free.
That's going to be quite hard to beat.
We've got lots of different options.
We have. So let's start with index funds. And that's going to make us 8 to 10% a year.
Yes.
That's not bad.
It's definitely not bad. If you want to be an incredibly lazy investor, which I've got no problems with being a lazy investor, then 8 to 10% is not bad. However, I think what people forget is that is not a guarantee, that is an average. So you are averaging 8% to 10% per year, which means there's going to be years where you're earning less than that. So if you're relying upon those things to be your income, it's a bad way to go. Nicht gut, no bueno. I think those are the right words. So yeah, those are not the things you want to be doing. You want to be, if you're doing that for the longer term play and you're in your 20s, you're in your 30s, you're in your 40s, fine. If you're in your 50s, still kind of okay. If you're in your 60s or 70s, it's not a good play. It's really not a good play because that is the average return. We know that we are due currently a massive crash and a correction in the stock market, in indexes. So when that happens, if you've just started investing those things now, you're in that later stage of life, you're going to put yourself in a tricky position. Yeah. So it's not really the best way to go. So yes, it's a very slow, very easy way to invest, and I highly advocate for it, but not as your sole form of investment strategy.
I think it's a good thing to look into as well when you're getting into investing, just to learn about. And an index fund is a lot more general, isn't it, than trying to pick stocks and shares. Yeah. It's just a group of them, bunk some money in, hopefully it will average out. But you're right, it's quite a a low average, and it will go up and down massively.
Yes.
Okay, then. So individual stocks and shares, 15%?
15% if you're picking the right ones, right? So if you're going to go for individual stocks and shares, you're going to have to do a lot of research, a lot of learning. Genuinely think there's absolutely zero point in doing that when you can just do index trackers. So as much as I'm not a big believer that index trackers should be your only way of doing things, if you're going to spend time learning how to invest, which you will have to do if you're going to be doing individual stocks and shares, then that's not where I would be spending my energy. Because the return I can get for learning how to invest in individual stocks and shares, time-wise, I could be making better use of by learning how to trade financial markets in general. So yes, individual stocks and shares, currencies, indexes as well, commodities like gold, silver and oil, which is what the STARTrading method is. If I'm going to spend time learning something, why would I go for something which will maybe make me 15% versus something that could be making me 5 to 10% every month?
That's a very good argument.
Not just yearly. It's hard to argue with that, right?
Yeah.
But it's true, that's the reality. And people are like, oh, well, I don't think that's believable. Okay, well, come and speak to some of my students. Come and speak to some of my mentees. They'll tell you exactly what's possible. We show people now every single month what you could have achieved the previous month, and it's very often above 5%.
Love it. All right, I want to talk to you about MLMs.
Uh-huh.
So for people that don't know what it is, we're talking about multi-level marketing.
Network marketing.
Which is quite common. Loads of businesses do it. And do you want to break down what it is?
Yeah, sure. So I'm actually not, you're more opposed to MLM than I am.
Really?
Yeah, I'm not 100% opposed to it, depending on what it is. So an MLM is a company who they have sales representatives who are part of their business structure. Think about a pyramid scheme. That's often what people refer to as a pyramid scheme. I do think, though, that a traditional business is also a pyramid scheme. You've got managers, a manager, more managers under that. It's also a form of pyramid scheme, right? However, the difference with an MLM is those people within the pyramid scheme have to sell the product in order to make money. So if you are a worker within an MLM, and I'm really sorry to burst everyone who's a network marketer here, it ain't your business. It's not. That business.
And the higher you are, the more cut you get from each person. So you get a cut from your team, they get a cut from their team, but you also get a cut. Then they make a team, but the queen bee gets the cut.
Yeah.
So it is a massive pyramid.
Yes, but if I'm, as the owner of a business, if I have a bigger business and I have multiple staff members and I have a sales team who I employ, I'm still making a cut off of the sales that they make and they're making a cut as well. If I then have a sales manager who has a sales team that he's managing.
But you're paying them all wages.
Yes, true.
These people are all trying to make money, but there's cuts going left, right and centre.
Yeah.
And they're all being promised the top position when in fact a very small percentage of people will ever get there.
Yeah,
Do
that's
you want to hear some stats about MLMs?
Oh, I feel like you came prepared.
I did. So the highest paid MLM people, there's someone in America who's earned 13 million last year.
Wow.
Someone else earned 12 million and someone else earned 19 million, which is great. 75% of MLM workers are mums. So they just go, you could have a part-time job, you could do this from home around your child. 32% take on credit card debt to start their MLM. 99% lose money.
Wait, say that again.
99% lose money.
Wow.
Because you often have to buy the stock and then try and flog it.
And I've been in an MLM and I had to pay to go to trainings.
Yeah. And you sell it to your friends and family and eventually just annoy them all because you've then sold it to them. But then you need a bigger network and a bigger and a bigger and a bigger network. So you're trying to what do you call it?
Recruit.
Yeah. You're trying to recruit other people to get their network, and it's just, unless you've got a huge network, it's not going to work. 25% make a profit.
Wow. Yeah. And also, let's not forget, profit is a very potentially 1 penny.
Yeah. So it annoys me because they sell it to people as you could be a top performer, but it is a huge pyramid where you're unlikely to ever be the top performer unless you've got an enormous, marketing brain, marketing budget and huge network.
Yeah. So I was in network marketing and I hated it.
What were you selling?
Makeup. Predominantly makeup. I mean, there was loads of different products. There's some health and wellness products as well. But I did really like the product. I won't lie. So I used it myself.
Yeah.
And I just was sold the dream. Completely was sold the dream. But the reason I hated it is because I felt like every conversation I had with everybody felt like it was laden with agenda.
Yeah.
Like it just was. And I was like,
Yeah.
I'm trying to help. I'm trying to have every person I come into contact with, my family, my friends, strangers on the street, people I bump into on the tube.
You see my skin? Do you really like it? I could help you.
It's fantastic, yeah. And all of that sort of stuff. And I was like, this isn't what I'm about. I don't want to be that person. I want to just enjoy spending time with people. And again, contrast that whole structure and whole system with trading. With trading, it is just you and the market. You don't have to convince anybody of anything at all.
Yeah.
You don't have to sell anything to anybody. You have to use your skill set that we give you with the STARTrading method, and you apply that to the market. It's you and the market, and that's it.
That was an easy win, Lewis.
Yeah.
All right.
Oh, and by the way, just to go back to MLM,
yes.
it's not your business. They have the rights to absolutely everything. They can get rid of you at any point they choose to get rid of you. And if they decide to do something that you don't like, tough. You are not the master of your own destiny. You may be making very good money. You are still not in control of your life.
It's a tough one because I know a lot of mums who do different MLMs, and they are mums. They have got kids that they need to work around. And it's like there's this big corporation with beautiful products who are like, come in, we'll give you everything, we'll set you up. All you need to do is tell your friends about it.
Yeah.
So it seems like it can just slot into your life really easily.
Yeah.
But in fact, it's really, really difficult to get up there to be that high performer.
When I was in MLM and I was trying to grow my business in MLM, I was working crazy hours, traveling to this person, having a conversation with that person. It is not, if you want to be a top earner earning 90 million a year, it will not fit into the nooks and crannies of your life. It will be your life.
Yeah.
And that's the only way. You
need a massive team to
You're
be,
a salesperson. Yeah. You are a sales rep earning commission only. That's all.
There we go. How about business acquisition? You could make 10 to 25% on that.
You could. Or it could all fail and blow up in your face. There's also that one as well. That's the other flip of the coin.
I think business acquisition, because I've now bought and sold a few businesses, it's a really, really tricky one because there's so many moving parts and there's so many ways to value a business. And it really depends on the systems, the processes, the people. Like there's all these key things that have to be in place for a really good business.
Yeah.
So it's tough.
So if anybody is thinking about buying a business because, why set up a new business when I could buy somebody else's successful business? Great. Do you know what they did to get it successful? Are you willing to continue doing what they did to get it successful? Was it successful because of them or because of the product, the service, and the systems that are in place? Do you even know how to do due diligence? Like actually. And what about all the things which you can't factor into due diligence? What happens when things go wrong? How are you going to look after it? I'm just going to hire a manager because the business makes so much profit. I can afford to bring in a managing director that will handle everything. How do you know they ain't going to screw you over? How do you know how to manage that managing director? How do you know they're not going to just run rings around you? If you have not been involved in business, if you've not run your own business, how dare you have the ego and the audacity to think you know how to buy a business and then run it? From someone who probably been running that business for 5 years to 20 years, whatever it may be.
It's kind of a buzzword at the moment, isn't it? Like M&A, just buy a business, flip it, like buy an old school business and improve it.
Buy an old school business, set up a website and sell more. Are you mad? Are you mad? You think it's that easy? Do you think that people would have done that if it was already, if it was that flipping easy? Come on. Seriously. The amount of people I know who've bought businesses and that business has gone bust because they don't know what they're doing.
It's bad.
It's terrible. And guess what happens when they do that? All the people that were working that successful business prior to them buying it are now out of jobs. What do? You've just screwed over a load of people because of your arrogance. Disgusting. I mean, I'm just going to say what I think.
All right. So, devil's advocate.
Yeah.
What if you have got a lump sum and you're like, these people want to retire. I want to buy this business. I think I could do really well with it.
Well, first of all, they'll be selling you the dream that you don't need to use any of your money to buy the business, which, by the way, is actually possible. There's loads of ways you can do that without using your own capital. But if you're going to buy a business, you should have some understanding about how that business operates, right? You should have some experience in that industry. And I'm not talking about, and this is going to be slightly close to the bone, depending on who's listening to this podcast, but I'm not talking about the fact you're an electrician and you're now buying an electrical supplies company. That doesn't warrant you to have the skill set and the understanding of how to run an electrical supply business. You've been a Sparky. You've been a one-man band in your van, popping about town, helping people solve their electricity problems. That is not running a multi-million-pound business.
So you think you should learn business from the bottom up? Learn it, fail, grow, before getting...
I'm not going to say that's the way you have to go. I'm going to say that is a safer way to go about things before you buy a business. And so for me, I'm a business owner, right? I take very heavily the responsibility of my team and my staff, who I have to pay their salary every single month. If I'm buying a business that already has 5, 10, 15, 40 members of staff, for me, I'm now taking on responsibility for looking after them, making sure that they're taken care of, that they can put food on their table for their kids. And if I don't know what I'm doing, what am I doing? Why am I buying a business when I've got absolutely zero idea how to run that business?
So you're saying don't walk before you can run.
Exactly. Because if you run before you walk, you're going to fall over, you're going to break your leg, and guess what? You're going to take other people down in the process. And for me, that's not an acceptable outcome.
Very good. Whereas trading,
0 people are going to lose sleep over if you make a mistake, especially because we teach low risk, high reward.
Yeah.
So you're not going to take food off of your table if you follow our system.
Yeah.
B, you cannot screw anybody else over.
Yeah, I did feel like you were sounding a bit harsh there, being like, don't do it, you don't know what you're doing. But I also feel like, you know, me and Simon have built and run 2 businesses from nothing to selling it a few years later for a really decent amount. And actually the amount of stuff we've learned and the amount of experience we did, you know, sales, marketing, operations, finance, people is massive.
Yeah.
And there's no way you could just flick a switch and learn that, even if there's great management, even if there's great processes, great systems. So I see what you say.
Because if you've never even if you bring in a fantastic manager, great, but guess what, you're still the boss. You still have to manage that manager. If you've never had to manage someone, and also there's a difference between managing people who are lower than you and people who are better than you. That's a completely different skill set as well. So people like you and Simon, who are buying businesses in the same remit that you've already got experience in, and I'm talking about experience in running that type of business, absolutely zero concern. Zero concern whatsoever. You know what to do. You know how to grow it. You've done it before. That's very different to a Sparky who has been a self-employed individual running around town, maybe having a good self-employed business, to then running and looking after staff and multiple people and a whole operation.
Should we do like a business academy?
I think we should, yeah. That's next.
Watch this space. Okay, so we might not go straight into business acquisition if we're looking to get rich quick.
Not straight away.
Okay, let's talk about property. Yep. We're both in property. Flipping properties, 10 to 20% a year.
Yeah.
Sounds good.
Vile.
No,
again, flipping property, again, fantastic strategy. It really is. Yes, you can make 10 to 20% of your capital. So let's just put that into contextual numbers. If you spend 500,000 on a property in terms of buying, renovating, all of that sort of stuff, then you may be making 50,000 profit. You may be making up to £100,000 profit. Brilliant. It sounds lovely, right? But deals of that size with those types of higher numbers coming through, you're going to need, again, some experience. The people I know who are really good at that type of thing are probably already builders or some form of trade, and they do a lot of the work for themselves, or they've got years of experience as well. So people I know who don't do very well at that and who end up losing money are people who don't have the experience. Something happens that they've got zero control over. Even people I know who are very experienced in this, with some of their deals, something goes wrong which wipes out all of that profit because it's out of everybody's control. Yeah. So there is things that go on that you cannot account for, you cannot control. Yes, you can do your best to mitigate them when they happen. So for example, when I was doing a flip deal, it should have made me £30,000. I've been in property for a few years. I knew what I was looking for. I knew what I was doing. It lost me £30,000 instead. Various factors like COVID, buyers pulling out, then the next buyer just was an absolute arse, and decided to, the week of completion, basically threaten us to say they want 10k off of that purchase price, otherwise they're walking away. We were on bridging, we had to get off the bridging. The bridging company, because we went 10 days over because of COVID, charged us an extra £7,000 interest just because of that. Like, all these horrendous things, completely out of your control, nothing you can do anything about. You mitigate the risks as much as you can. It still lost £30,000, but wasn't a problem for me in one sense, because I had multiple streams of income, I had trading, and I had enough money in my trading account, and more so to continue trading, to look after myself, and to pay off all the investors and the bridging loan.
Yeah. Property is mad. It is a mad strategy. You can do a great spreadsheet with all the numbers and all the research, and then you're right, like, something will happen. Something will always happen.
Yeah.
So you've got to be really risk tolerant. You've got to be really resilient. You've just got to be ready for it. The good thing is capital appreciation is your friend.
Depending on the area.
Yeah, you have to do a lot of research. We always do market research, whatever we do in property, and we make sure there's high demand. But yeah, it's a bit of a scary strategy. It's got to be a nice long-term strategy.
Yeah, and it is long-term.
Yeah.
If you want to make capital.
Yeah, but even like, we know this team who do loads of HMOs, and we've got one project with them that's been delayed by a couple of months because of the neighbour. The neighbour cannot stand work being done next door, and the carpet fitters left and were like, we're not on this job anymore. And they had to employ new ones because the neighbour kept popping around and bitching about it. So yeah, it's just all the things.
All the things. So, and if you want to go for like a more traditional buy-to-let, you might be making 10% per year return. You might be making £200, £300 cash flow, aka profit, on a monthly basis, which is £2,500-3,000 a year profit. Then you have to pay insurance. Then you have to pay your accountant. Then what happens?
And the boiler goes.
The boiler goes.
Yeah.
I had that in one of my buy-to-lets the other day. Boiler breaks. Have to get it fixed. £2,500 to fix it. That's a year's worth of profit from that gone. So that yield figure of 10% ain't looking like it's 10% anymore.
Okay. Next. Then we move on to dropshipping.
Yeah.
I mean, that's been a bit of a buzzword online, hasn't it? Just do dropshipping. You don't have to do anything. You can do it all from home. 10 to 20% varies widely.
Of course it varies widely, because the people who make a success out of dropshipping, have managed to build a whole brand. So it's not dropshipping, it's business.
Yeah.
Like, you have a full-on business, you've built a brand, you've got a marketing system, marketing strategy in place, and that's what's working. Dropshipping is attractive to people because you can sell stuff before you own it. So there's lower upfront costs. But okay, I'm going to start selling trainers and I'm going to dropship them. Great. Who the heck knows me about trainers? Who's going to buy trainers off of me?
Yeah.
Nobody.
It's a bit like designing a planner and selling it on Etsy or something.
Yeah.
You need a brand behind it. You need marketing behind it.
Yeah.
Yeah. Then we go to crypto and NFTs.
Yeah.
Minus 50% to plus 100%.
Yeah. And more so.
Yeah.
So if people are into get rich quick, guess where they go to first?
Crypto.
Yeah, because there is massive potential upside. And what happened to all those people who became crypto millionaires in like a couple of years ago when it was boom, 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 boom? What happened to all of them?
Went down again.
They all went down. And they were left with nothing or less than what they began with. Now, don't get me wrong, I'm not anti-crypto whatsoever. I own crypto, I buy and hold crypto, I believe in it for the long term, but I treat it more like stocks and shares, not like get rich quick. So I will not touch my crypto for probably about 10 years. That's my plan with it. So
the risk in crypto is so high that in a diverse portfolio, you need to be holding a tiny bit of it.
Yeah, they say, like, the people that talk about wealth management in general say about 5% should be in crypto.
Crazy.
Yeah.
And then finally, we've just got the gig economy.
Yeah.
Just go and drive for Uber Eats. Just go and pet sit. Just go and dog sit.
Yeah.
You can make money next week by selling some stuff on eBay or Vinted.
Yeah. And I think this is actually a brilliant one because it highlights what we've not talked about in all of the other ones, which is time investment. So again, dropshipping, there is time investment there. Oh no, you can AI a website, you can AI this. Again, you need to build a brand. Building a brand does not happen through AI. There's no human interaction there. Brands are built on human interaction. So if you want to do property, don't even get me started on how much time is involved with that. On this Friday this week, I've got to go because I'm buying another property. I need to drive 2.5 hours to sign a piece of paperwork, have a Skype call, and then go home again for one piece of paper. Like, property takes time.
Yeah.
Like, this stuff, all of this takes time. What doesn't take time is trading. 30 minutes a day, max, done.
I think it's a bit of a winner, isn't it?
It's a winner. I mean, like, there's that meme, isn't there? The meme of someone says a statement. Some guy sat at a table, and he has a statement. He's like, "Prove me wrong. Prove me wrong that trading is not the best place to start creating wealth. I'm yet to find something better."
Boom. Mic drop.
Mic drop.
Don't, you'll upset
No,
someone.
it'll fall over. But there is not. I do not know something which takes less time commitment and has the level of return. And UK based is tax free. Yes, we have students all over the world. We can show people how to mitigate that tax, but the major factors are low time commitment, low risk, and high reward.
I think when people are in a tough financial situation where you're trying to pay the bills, you're trying to pay childcare, you're trying to buy food every week, the cost of living is going up, and you can see these things like join the MLM or invest in this or buy some crypto and it could increase your income and it could go up by 50% tomorrow. It's just so tempting.
Yeah.
But there just isn't a get rich quick scheme. It just doesn't happen unless it's super high risk.
Yeah.
Like anything you do, you have to work at, you have to learn a skill. So I think we just want to encourage people to think, okay, I need to pay for these skills. I need to pay for this knowledge. I need to invest something. Nothing is free. But do your research. Look at all of these things. See what interests you.
Yeah.
And then do trading.
Yeah. But again, in all seriousness, that is why Forex and 5 is so good.
Yeah.
Because if you're looking at loads of different options of what maybe I want to do, what is a good fit for me, something like Forex and 5, which is so low as an investment, of like £30 at the moment, may change, but even if it was £100, it'd be completely worth it for people to identify, is this form of wealth creation a good fit for me? How could it work for me? How could it fit into my lifestyle? How could I find an hour a day to learn this skill set? And once I've learned it, how can I spend just 30 minutes a day maximum utilizing this skill to generate me what I want to generate?
I think you've done a very good job, Lewis.
Thank you.
I think you deserve a snack.
And another glass of wine.
Why not?
Why not? Wine or not? So yeah, I think it's time to do a little bit of magic.
All right then, let's do it.
I think I'm going to need... something in my waters is telling me I'm going to need a spoon for this, though. Yeah.
Should we magic a spoon as well?
Magic a spoon, right. Let's do this. 3, 2, 1. Ba-ding!
You're so magical.
The magic spoon. I know.
Goodness.
There we go.
What do you think it could be?
I'm going to go with some form of posset. Like a lemon posset. I only know the word posset from Come Dine With Me.
Love Come Dine With Me.
Love Come Dine With Me.
What happened to that? Is it still
It's
on?
still out there, yeah, but they had a hard time in COVID. I feel like there might be like, no, I would love it to be a Rolo dessert, but I'd be surprised if it was.
Do you remember when I got you like a chicken paste?
That was vile.
Could be something like that.
It could, but that was vile, so hopefully not.
Okay.
Shall I go first?
Yeah.
Oh,
What have you got?
I have got what looks like some form of jello shot. I'm going to say it's peach. Has it got alcohol in it? That'd be good.
Maybe.
Oh.
It may or may not have come from a multi-pack for the children.
I was going to say, because there's no other packaging on it. I mean, it's got me very wet.
Oh.
Oh, I've got it on my knickers.
Oh no.
Oh, it tastes good.
Yeah?
Do I drink it or do I... No.
Come on, you've been given a spoon.
Yeah, but it was quite wet.
Okay.
Yeah. So it's jello.
Jelly.
Jelly.
I don't know why I've gone so sweet this.
I don't know. Surprise is high.
Yeah?
Flavour is lacking.
Oh no.
It tastes a bit like a Bellini. Is that a word?
Like Bellini the drink.
Bellini. Like kiwi, you know, kiwi fruit drink.
Yeah. Kiwi drink.
Not kiwis. What's the like? Not kumquats. Not peach. Basically, the flavour's mild.
I want to know what you mean. I'm going to open mine. You can think about it. Okay. Oh,
Lychee.
it tastes like lychee.
Yeah.
Okay.
You know,
Yeah.
a really like gentle flavour.
Yeah. Fragrant.
Yeah.
Yeah. I got a baby bell. I'm quite happy with that.
I almost bought 2 because I wanted one.
Why wouldn't you? Don't they just wait? You can't buy an individual baby bell,
You can.
can you?
Well, I did.
Oh, didn't they come in little nets?
That is one option of purchase.
Yeah,
Yeah, I'm not going to eat any more of this, by the way.
baby bell. Okay, thank you. I'll split it with you.
Oh, that's so kind of you.
Yeah, it's okay. It tastes nice.
It can't not, can it, really?
No, it's good. Surprise 7.
Uh-huh.
Taste. I mean 6. It's processed cheese. But I'm enjoying it.
Well,
so
technically all cheese is processed, but okay. So my Jello was a surprise of 8.
Yeah.
Taste of 3.
Okay. Sorry
Yeah,
about that.
that's okay. I forgive you.
Thanks.
Well, we're going to continue to enjoy our cheese, and it's been lovely to see you on this episode where we have absolutely attacked everything other than trading. If you disagree with me or Sophie, let us know in the comments. That'd be great. We'd love to have a little bit of conversation about it, but please know you're wrong. And we will speak to you on the next episode.
Bye.